Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun. Good morning, everybody. I'm having some platform issues this morning, so let's fix the lighting there first. Applications are starting up here. I guess the platform, like my computer restarted without asking me or something like that. Uzi, you survived! Did your tree survive? I was concerned about the trees. The music is louder. Ooh, yeah, sorry. Hold on. There's that first. I can't even hear the music because my platform definitely restarted without asking me. That's weird. Okay, there we go. Okay, so you survived. Did your trees survive? Did your house survive? Morning, Octavius. Okay, by the way, we are getting PPI here. US PPI month over month expected reading spot 1, actual 0, and core PPI month over month in line at spot 2. And the market not doing a whole lot of anything. Everything was good. Lots of oak vomit, but no biggies. Wow, good deal. I'm glad. Power was out for about 7 hours. Yeah, it was what yesterday I was like, there's no way we're gonna see Uzi today. There's no way he's gonna have power. But so far, like, the thing is that as much of a run up as there was into that storm, after it passed, I didn't really hear much of anything. And it kind of sounds to me like, by and large, people got out okay, and it was just another hurricane. That's because it's glorious outside. Okay, so let's check the charts before we get too much into this. So yesterday we had the CPI, which was hotter than expected. Another factor I never really kind of talked about and kind of forgot about. So I kind of feel bad like I missed it, but there was also the jobless claims, and the jobless claims was a pretty big jump over the expectation. So that, and people just betting that the Federal Reserve isn't actually going to do anything, you know, they actually pushed higher. Now there were some attempts at the downside later in the day, but then after the 30-year auction, which apparently had very, very strong demand, it was just all up from there. And we're getting a little bit of upside action here now because of the PPI. Okay, so for the S&P 500, a lot of noise, but not anything all that interesting ended up happening. Oil a little bit higher. My latest that I heard on the whole Israel-Iran thing is that the U.S. administration is pressuring Israel to be measured, and that the Israeli war cabinet could not come to an agreement. So we continue to wait over there. Gold and silver a little bit higher today, coming back into that range that we had earlier in the week. And then we got copper still down there, so nothing in China. And the Japanese yen, not too much changed from yesterday, and the dollar at 102.5. Bitcoin seeing a brief dip before 60K before recovering it back. I should, you know what? I tell you what, till later today, I will make sure to run my model for Bitcoin, and I will post the images in the $3 Discord. All right, so Uzi talking about how it's really nice outside now reminds me that the images that I saw of, like, you know, there's a plane that flies into the hurricane and they were in the eye of the hurricane, and the images from inside the eye of the hurricane were insane because it's just a wall of clouds, super high. It's just I've seen shots of like the inside of an eye of a hurricane and everything, but nothing like that. It was tremendous. They tend to suck all of the humidity out of the air after they pass. Oh. Well, it's here in Utah. It's still relatively hot, but oh, it's so nice. So nice. Just kind of a little bit hot and dry is really nice. Okay, so what do we got here? Okay, so first of all, 70. Oh, wow. I think we're a little hotter than 70. By the way, did any of you guys see the aurora last night? Apparently the aurora was really big. I was watching the hockey game. I tell you what, man, the Utah hockey for the first two games, they just knocked it out of the park. I really think from what I'm seeing other locals saying and everything else, that Utah is completely in love with the team and everything now. It's a real thing. And but I was watching it on the television antenna, so I have like one of those antennas that's just like a little square fractal kind of antenna, and it kept cutting out on me. And I think it was because of the aurora. I also had a brief power outage yesterday, and I think that was maybe because of the electrical storm as well. So really, really big electrical storm. And yeah, actually, you know, if I went out there right now, maybe I should go check. We have Ethan. Ethan did not go back. He like went to sleep at 8:30. He went to bed a little bit earlier than he normally does. And then I guess he decided to wake up. Like, he realized that he went to sleep early and didn't want to do that, and woke up and has been watching his iPad all night. And then started crying when I went downstairs. So he's in the other room. And if he's done with his Pop-Tart, I'll probably bring him in here so I can keep an eye on him in here. So I'm going to do that. I'm going to take a peek outside and then drag him in here. Too cloudy in Florida. Yeah, I don't know if it would make it all the way down to Florida, but they were saying that like you might be able to see it in Alabama. But it was cloudy here too. I couldn't see it. Okay, let me go check.
Block cell.
Muted myself. I was just saying I actually could see the aurora. Like, it was just a faint blue glow. But I could see. Nothing spectacular, but I could see it. I bet you that if I was taking a picture, you'd see it really well. Still too early in the year to really see Orion or Sirius, though. Okay. Wow, they're selling it now? Well, that's interesting. Wait, did I miss something? Iran is threatening in secret diplomatic backchannels to target the oil-rich Arab Gulf states and other U.S. allies in the Middle East if their territories or airspace are used for an attack on Iran. I'm not seeing a move in oil, so I don't think that that's why the treasury's reversed there, but that is a pretty wild reversal. Let's take some notes. Ooh, do I have sudo now? SU? Nope. It's a new feature, but apparently it's not built into that particular shell. And why do I have my default shell be the one that's... Whatever. Wait, is today the 11th? Oh, yeah, it is. No. Do I have it backwards? We've got consumer sentiment today. What else do we got going on? I don't think we have any auctions today, do we? No, but we do have Fed speakers. Iran tensions, we'll add that on there. Amir, good morning. Well, I think we should try and relax. I mean, it is moving. It's doing something. I don't know why it's doing what it's doing, but I think that it might make sense for us to just kind of chill until the consumer sentiment comes out. But we'll see. You know, maybe there was something going on there that I missed or, you know, something like that. Good point. Good point. 100-day moving average. Let's come back and look at that real quick. Yeah, right there. Pretty close to where it was yesterday, 28. Yeah, Iran tension, because Israel is saying that they're going to strike back at Iran, but they haven't decided how yet. And so people are a little bit weary about. You think it's worth adding to the list the Canadian data? Yeah, well, let's see here. The Canadian employment change was much hotter than expected. I guess we can add it here up at the top. Employment front and center, so rates are sensitive. Oh, that reminds me, I read an interesting article yesterday. It was basically, there was this, or rather there is this economic institute of sorts that are all very upset about how things went during the pandemic. And so they've been starting to put together studies and things like that. And they had a study where they're basically saying the official measures of inflation have a lot of biases in them. And so they went and they kind of made their own adjustments. So the two major adjustments that were in there that I recall was one that they don't like, that they use owner equivalent rents instead of just housing prices, because housing prices have gone up way more than rents. I actually kind of think that this is a situation where exactly why you kind of use owner equivalent rents is just that that's a bad measure because it's so lagged. But I actually think that that one's maybe more indicative of rent because most people are not paying the new housing prices, right? So that's going to exaggerate your result. And then the other one that they had was like substitute and or indirect things. So like you're paying more for your healthcare costs because, you know, costs at the hospitals have gone up, but you're not paying for it directly. The insurance pays that, right? And so when they do their analysis, though, you adjust everything with their new CPI measure, and it basically shows that we've been in a recession for the last 2 years. Isn't that interesting? Like their claim, I think that they're wrong, but I think that like I don't think that their measure is perfect, but it does make you think though, like, oh, all of these things like GDP and everything, they all depend very heavily on GDP, or sorry, all of these measures like GDP depend heavily on inflation. And so when you use a different inflation number, all of a sudden the results that you get are completely different and don't look so good and more match the way that people feel at the moment. Break-evens aren't stressed yet on inflation. By the way, Will, it's a new name. I'm happy to have you here. Thanks for joining the stream. Yeah, it's like, well, it's so I think the labor market is the most interesting. Maybe because I'm between jobs and so I'm experiencing it right now. And let me tell you what, man, the labor right now is a nightmare. The labor market right now is a nightmare. I have really, really great skills. I am somebody that normally I go out and I apply to a job and I will have a new job within several days. Okay. We're on week 3. We're on week 3 right now. And the thing that I am noticing is that even if you have a really good resume, you've run it through all the robots, you really hyper adjust it to the job listing that they're putting up and everything else like that, the response rate from companies for ads that are put on LinkedIn at least is extremely low. Like 1 to 3% response rate. It's insane. And then you got to realize that there's like all of these guys that got laid off from Google and these other, big companies. And so they're going to go for the person that has Google on their resume just because it says Google, right? Meanwhile, there's other jobs that like they're not getting filled. I can see like they keep listing them and like they're aggressively recruiting for it, but they don't feel like that they can find somebody that qualifies. And I bet you that there probably is somebody that qualifies, but they're just not getting through their resume filters. So it's crazy. It's a crazy tight job market. And the top line stats are just not showing that. The top line stats are basically like so much job creation is happening from immigration and government. It doesn't show that business itself is really slow for everyone, and it's very difficult to find a job right now in the private sector. Like most people have a job and everything. Like unemployment's not high, but the job market is tight. It's hard for people to find new roles. Top line stats aren't showing that. So we're in a really unique spot in the economy. And it just kind of reminds me of this common phrase that like when a measure becomes an objective, it ceases to be an effective measure because people will just goal seek the measure. And that's what's happening right now. So the politicians, they know that the unemployment rate and everything is really, really important. And so they do all of these things to make the unemployment rate look good, even though like average people are still struggling. Oh, you're in Australia? That's interesting. There are a lot of traders in Australia, but I don't think I've had one in here for a while. You have the same kind of theme here. I tell you what, man. We don't hear a lot about Australia over here for some reason. But the last few times that I've been hearing about Australia, I'm like, what are you guys doing down there? It sounds like a communist dystopia all of a sudden. Like, whoa. A really liberal government in Australia for a long time, and some of the things that they're doing, I'm kind of really shocked by. Oh, really? I was a sell side and then buy side, and now you're a family office. Oh, I am so glad you joined the stream. I would love to know more about your experience, man, because I really want to like graduate into like running a fund or something like that, or getting involved in the family office. Like, it's a stir desk. Okay. See, because it seems to me that the real money in futures is made from swing trading momentum strategies and not day trading. That like if you're not a robot, the chances of you making real money, like you can pick up scraps. I think that's what we're doing. I think we're picking up scraps, but like not a lot of money is really made from the day trading aspect of it. Like these institutions that are really like straight up, hedge fund, quant firm, family offices, etc., etc., etc. They are by and large portfolio level momentum strategies, and or like citadels. There's a few citadels out there that are really fast. You pointing? Oh, I see. You want to sit on my lap. You don't want to sit in that chair, do you? Come here. Here, put this right here. There. Now can you see yourself? You're not tall enough. The hedge fund I was at was 30 billion. All positional, deep stops, large targets. Now tell me about that. How did they determine what their stops and targets were. I would guess that stops would be, just like, this is the maximum amount of risk that we can afford on an individual trade based on our value at risk and all those sorts of things. But how are they determining where they think it's going to go? They just, because the way that I think that they're, that a smart fund would be doing it is, we're expecting this flow to come in and it's going to be X thousand contracts. And then they calculate the impact of those those contracts over the time frame and calculate what price it's going to go to. But then another part of me says maybe that's too complicated. Maybe they just say, oh, it's going to go to 113. The multi-strat firm. So that's another good one. One of the things that I've come across a lot is that, and for day trade, again, it's like one of those things like day trading. Okay, I get a strategy and it's a day trading strategy, and it will appear to work over a time period, and then like it doesn't work over a time period, right? And you're like, what? Why did it work here and not here? And is there something that I can look at that will tell me when I should trade it and when I shouldn't? And the more that I dig into those, the more that it's like it was probably just random chance that it was working at that time. But when you get into a swing strategy, it's different. It's like you can get a bunch of swing strategies together and then utilize AI to determine which one you're going to trade. That seems like one of the ways to go. Yeah, let's see here. So 160 odd PMs, each with a slice of the capital, and they run their own business within really. Futures for hedging, better to trade with a bank in OTC. Keep them. Oh, that's interesting. Because my thinking has been like, okay, so let's develop a momentum strategy. And then, like I have this Series 65 and I have this Series 3. So I could make a swing futures strategy and start a fund. But like, how would I even go about finding the people and all of, finding the money and fundraising it and everything? That would be, I know nothing about what I'm doing. I need some assistance, some guidance from people that have been in the industry about how to go about doing that. But then the other issue is that it seems to me that momentum hadn't done so well lately. You need a track record of 2 years in a Sharp over 3? Wow. So I haven't looked at what the Sharp ratio is on the momentum strategy. Like I have a really basic momentum strategy going. And I should spend more time on that. Actually, you know what? I should be putting that in these. Should be putting that in my notes. Because I got the data from Norgate and everything. But I don't think I was getting anywhere close to a Sharp ratio of 3. In fact, for like day trading, scalping types of strategies, I find it very difficult to get a Sharp ratio even above 0.5. Believe it or not. So that actually brings me to a different subject. So I've been doing research on the quote unquote prop firms Keep your job at a fund. It's all yes. Yeah. And I have heard this whole thing that it's kind of like you have a bunch of different small account managers and they're all performing and for you, and that's kind of part of how the hedge fund community, like how it started, was that like he would hire the brokers and go to a real prop firm. Yeah, not on, like SMP. Yeah. I really hate that everybody's calling them prop firms, because they're not really prop firms to me. Like, they're not making their money from the trading, and by and large, the people there are not actually trading. They're not live orders. The people, they make money off of sim accounts essentially, and they pay people. They're a chop shop. I haven't heard that term before. Let me look that up. Let's see what they define as a. Don't put that. Why are you putting a stuffed animal on my desk here, Ethan? I'm surprised you can't see that in the camera. That's so funny. Okay, chop shop. Maybe chop shop trading. Chop shops are standard trading firms that regularly recruit new traders and look primarily at your trading volume and structuring their deals. Oh, I see. Anyways, okay. So I've been doing all of this research for quote unquote prop firms. And 2 days ago, yesterday I just watched the kids, but 2 days ago, I did a bunch of research about, like, do they actually have live trading? Which ones have live trading, and what do you have to do to get to live trading, and all of that sort of stuff, right? But it's gotten me thinking, like, really the way this is going and what people are doing is, they're just sim trading, and the most that you can lose is what you pay for the combine at the very beginning, right? So it really does incentivize you to do like crazy, stupid stuff, right? So strategy that like has a really good chance of passing the combine in that month. Like, you're taking on big risks, something that wins most of the time, but then when it doesn't win, it's just gonna absolutely fall apart. And are you going to be able to recognize that that's what's happening and shift? And most of the time those people don't. But I'm sitting here thinking like, well, I might be able to do that. And even if I don't, again, it's just like, okay, if I get a payout, it's still a win, because the most that I can lose is the fee for taking the evaluation, right? Easy to get rich if you were the owner, right? But the whole thing is that a strategy that's going to be good for the combine is going to be something that by its very nature is basically destined to fail and blow up. And for some reason, when I'm talking to people on, like, especially when I get on Reddit and I'm looking at these threads and stuff, people don't understand this. And so I'm trying to figure out a way to show them. But the thing that I find so difficult with this is every time that I sit there and I think, okay, so here's something that I think could work. It would be really ill-advised, but I think you could pass a combine with it and or get a couple of payouts. And I would really like it to be automated. I would like it to be automated because then you could give it to other people and watch them use it, right? And or they can backtest it and see what really happens. But every time that I think I have something like that, it doesn't work. For some reason, even though I see a lot of people doing these strategies where like their stop is twice as far away as their target or something like that. Like, I'm over here trading the treasuries and I make 4 ticks if I win and I lose 8 ticks if I lose, or something like that, right? But every time that I try structuring a automated strategy like that, it's not effective. It always works better on equal risk reward or better. Do you want to go back outside, buddy? Hold on. So yeah. So that's my challenge. What do you guys think? What do you think is like the most degenerate combine strategy, that risk-taking strategy that we could trade? Would probably want to be at something that you trade on equity indexes or oil. And I don't know beyond that. I sent you a ping on Discord. Let me see. Message requests, maybe? Oh, I don't see. Are you sure you sent it to the right person and not one of my impersonators? There's impersonators out there on Discord. So I should check that, by the way, and check that in a day or two. Members. Just speculators, Seth. Brought me this stuffed animal over here. There's my phone. I'm gonna make sure I got a camera on him. One of the things I regret is when I was building a house, not going and putting Ethernet cables everywhere for power over Ethernet cameras. I got some cameras in here, and I should be able to see what he's doing. Says that what is your Trader Billy A4 or AU? Let's try it. Find or start a conversation. Oh no, that's not how it works. How do you do it? Create DM, type the username. Or maybe, let's see, are you on the Discord here? There you are. There you go. Do you see me now? There you go. There you go. I don't know who you thought you were messaging before. Was one of my imposter accounts that got through. Oh, I see. You left a message in the main chat too. Cool. I'll accept that one. Anyways. don't know. One of my thoughts was like, okay, like let's make a strategy that like when it's losing, it like doubles down and tries to split the difference or something like that, right? But like the issue that I keep running into is that any kind of a setup that's based on like just time price series just ends up being random in the long run, you know? So like, I guess I haven't tried making one that truly tries to like scratch. I want to go into it enough though. I'm gonna pull up my editor here. So we had one that was called Degenerate Gambler. What was that trying to do? It was trying to do something with the Fourier. And it was kind of taking a skewed risk reward. There you go. My strat is built of so what type of a data series? Is it still a single instrument price series though? And just maybe not like time price, like volume price or something like that. Because one of the issues I've run into is like, okay, there is kind of this issue where like there are periods of the market that are slow and there's periods of the market that are fast and everything. And you kind of want it to maybe ignore these periods of the market where it's slow and it's not really moving. But like when you go and you change it to something like a tick or a volume or a range chart, that just biases it towards taking trades in the most active action. And then, you know, it basically, it wants to take all of its trades in a period where it's not actually going to get filled, you know? So that doesn't work very well. Yeah, I'm getting a decent amount of, you know, oscillation from the original news. Like the thing is all these retail traders, they're going to be using your price. So like, I really think that it should be something that runs on a 1 minute chart. Oh, well, somebody got it, but that is not Melissa. That's one of the kids. Single product and just price, and yeah, so that would be like a range chart, right? So more specifically, if I do a back test in NinjaTrader on a range chart, which is basically every time that price changes, it makes a new bar, it doesn't work. Like the back test looks amazing, but when you try running it live, the results are not even remotely close to the back test. I'm also thinking, didn't I do something that was like a breakout reversal sort of a thing? I don't know. I'm just gonna try it. Okay. New strategy. We're gonna call it double down. Generate. Gonna copy maybe a few things from here. Make a stop and target. Yeah, I think so. Then I need to do something like if market position no, I'm just gonna make a Boolean in trade, maybe. So let's do a little bit more of a pseudocode sort of thing. So first of all, we're gonna have like base entry conditions, and then we're gonna have the double down. Like this. If the market position dot long, I keep thinking that I'm in my text editor. Then I say if the close of 0 is less than my double down price, then I'm going to add another contract. And then I'm also going to set target to break even. I think that's what I'm going to do. Oh, that is my wife. Okay. She's just waiting for when the bit of kids she can take. That's what's going on. Okay. I'm cooked. It's 12. Is it really? It's really that late? I did not know. Yeah, you should go to sleep. But thanks for stopping by. I appreciate it. I feel like I'm having a hard time. Yeah, well, you're on the Discord, so you know. There's a Discord channel for CTA, and there's a Discord channel for like quantum programming stuff, so you can put stuff over there, or you can just tag me. For some reason, I'm having a hard time getting into this programming thing here. Maybe it's because I don't really have a good entry condition, right? Okay. Let's do it as, let's try and make this as like an experiment sort of a thing. So like, let's say that at the beginning of every day, we pick a random time to take the trade. So I got this whole thing. I think there's like a start time. There's a start time, and then I'm going to say public int stop time get set. And I'm going to come in and say, so there, what does this have for the defaults? And does it do it at, okay. 13:58, that's weird. This is set to take a trade at like the end of the day for some reason. Well, okay, whatever. We're going to do it like this. We're going to say that we're going to do it at, and does it do it in local time? I think it does it in local time. $6:20, and stop time is going to be like just when we trade. So like, let's do it. Well, maybe I don't need to even calculate, right? Let's do like 180. Okay. And then if is first bar, is first tick of bar. There's one that's like is first bar of session. Oh, that's right. If bars dot is first bar of session. Okay, and then And then we say if, let's come back over to here and see how this does it. Time equals yeah, we need that too. Plus offset. Should we make it the direction completely random too? Now let's just do int direction like that. Are you writing a script to emulate degenerates? Kind of. At the moment, I'm just trying to make something that is random. So what it's going to do is it's going to pick a direction. It's going to, at the beginning of the session, it's going to pick a random time during that session to take the trade in a random direction. So we'll take one trade a day, but it will be like a random trade, a random time in a random direction. And then it will wait until that time comes and take the trade. So if we're at the time, then we say if underscore direction equals 0, then we're going to enter short, else enter long. Okay, then And this will be the doubling down, except for that I'm going to should comment it out like this. Gonna comment that out, okay? And I'm gonna, I have all of these properties, but I'm gonna leave those alone for now. Stop and start time should be good. Okay, let's see if that compiles. Oh. Double down entry. Let's call it that. What's your hypothesis? I'm not really sure, to be honest with you. So what I want to do is I want to make a random entry. So what I should get with this is I should just get something that's pretty random and wins like 40% of the time or something like that. And then what we're going to do is we're going to double down. Every time that you have it, there's going to be like a double down spot. And my theory is that it will increase the kurtosis of the strategy. That it will increase the win rate, but that there will be losers that'll be really bad. And that overall it won't be profitable. But maybe there will be periods where it's pretty profitable. We'll see. Okay, current does not exist. Oh, right, because when it does this one, you do date time current equals this one. So you get the current time, I determine what the offset will be, and then I add that current time, I add that offset to that current time to get the trade time, and then I pick the direction. Then we're going to wait until the time equals that start time. And if the direction is 0, we're going to enter short. Otherwise, we're going to enter long. This was today's trade time. Okay. Let's see if this works. Okay, so it is, I don't know, where is it? I called it double down, right? Did it not get named properly? What did it get named? No, it got named double down. A, B, C, D. Oh, it's under CTA. Why did it get created under CTA? That's funny. Okay, double down. None of this should matter. Start time should be okay. Instrument. I guess we want to do ES, huh? ES. Just this year. I guess we should include commissions. Okay, did not take a trade. Falling on bar update method on bar 0. Well, I don't know why that. If current bar equals 0, return. Okay, that still did not work. What's... Okay, I'm really confused by that error, so I am going to debug it. I don't, because there's nowhere that I'm looking back a bar. They're all zeros whenever I'm looking at into a data series. So I don't understand how I could possibly get that error. Probably when I get it to break, I'll be like, oh no, duh, but I just don't know what would be causing that. Okay, it's going. What line is it breaking on? Oh, I see.
Connection lost.
But that's not the error that it was giving me. That's not the error that it was giving me. Yeah, there we go. Offset. This line go away. Ha. Okay. Well, so far that's not really too bad, except for that direction always ends up being 1. Like between 0 and 1. So let's make ran.next this one be 2. So then we can say if direction is 1 and otherwise it'd be long, then that should give us an equal amount of longs versus shorts. Da-da-da-da. Okay. And my win rate is 44%, which is like exactly what I would have expected it to be. But also you get to see like the distribution of the trades, so that's kind of fun. If I come in here to oh wow, that's actually interesting. So completely random, there actually is a time period. Hold on. Currency. Yeah, oh wow. There actually is a period of profitability that would pass a combine in our completely random backtest here. Now, one of the problems that we might have to deal with later, but let's not worry about it for now, is that if I run this again, I should get a completely different, yeah. It should take a trade every day, but, whoa, ooh, geez, okay. Okay, interesting. Now, if I have, like, set stops and targets and everything like that, that's going to change it a lot. Also, I want to see, like, these MAEs, MFEs, yeah. Actually, some that were pretty negative. Okay. So, next thing that we're going to do is we're just going to take advantage of the targets and stops. Okay. So, but let's not call it target and stop. Let's call it, where's my advanced base strategy? What do I call it over here? Range size. And healing stop. Targets, reward factor. Stop and reward factor. Well, let's not worry about it for now. Okay, so now when I say enter long, enter short, and actually go random long. Is that it? Nah, I think I can just do it like that. And then set profit target. Yeah. Calculation mode dot price, I think I want to use. Target. Is market if touched? Sure. From entry signal. Okay. Oh, good morning, Apol. Yeah, we're gonna have Goolsby here in a second. Expect him to say something dovish again. Stop. Double stop price equals pose of 0 plus stop. double target price equals close of 0. Well, oh, actually, this should be, if it's a long, then it should be minus, right? Close less stop times reward factor. So let's come over here and just say stop equals, let's go for 10. No, let's not go for 10 points. Let's go for half of that. Let's go for 20 ticks. Stop reward factor equals 1. Okay. And this will be the other way around. Minus. Okay. So now, well, actually, let's do it like this, and net profit. These should end up all being the same length, essentially. Okay. That did not quite do what I expected it to do. That did not do what I expected it to do at all, in fact. Oh, okay, so part of the problem here is that I need to change this to be... Okay. You can see I missed a space there. So maybe it kind of only half worked. There you go. Oh, I know why. Okay. I wanted to represent everything in terms of ticks. Still 4 points in price should be more than 4. I don't know why. That's a little weird. And none of the trades ever win either. Okay. Reverse that strategy, huh? What is going on here? Set profit target, random long, calculation mode, dot price, comma target price. Reward factors 1. Fascinating. So it's like immediately stopping out of the trade. What's with that? Do I have things wrong here? So if oh, I do have things wrong here. The stop I thought that the first set was longs, and then they're not. They're shorts. Rent longs. No. Oh my god. It's so funny. Okay, wait. Let's just shift this around. That's a funny mistake. Okay. No, but it still doesn't like it. Okay, so let's try this again. There's a long, then my stop is going to be down, and my target is going to be up. Long, 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 long. Short, 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 short. If it's a short, my stop is going to be above me. And my target is going to be below me. Why does that not work? So how is this one doing stops and targets and stuff? Oh yeah, it's doing it up here. But then degenerate gambler, it should be doing this, right? Oh, it uses calculation mode .ticks. Okay. Let's try it that way then. Now that's really, really weird, right? Let's just do it like that for a moment. Oh, wait, I'm so fucking stupid, guys. Wait. I do have stop set to 20 there. That's so funny. Okay, wait. Get rid of this. And this. Build it. There we go. Stop time. Better. Much better. Oh my gosh, it says it's actually profitable? That's hilarious, guys. That's hilarious. Wait, is it doing this right? Oh my gosh. Oh my gosh. You see that? Dude, I gotta take a picture of that one. And put that on Discord. That is so funny, dude. Okay, but they are all ending up being a $250 win or lose. It's wild how on that run they both ended up being 53%. Like, that's nuts. So run it again is probably not going to be profitable. Oh, okay. Well, it's a little bit better, but the long trades are still good. Like, the long trades are still good. So that's pretty great. Oh my gosh, that's so crazy. Oh man. Dude. Well, now I also wonder if it has anything to do with the market is if touched bit. Because I don't think I've ever used that before. Oh, are we already to University of Michigan in 10 seconds? Well. No, it's not that. Were we just really lucky on the first two looks? That's more like what I would expect it to be. Now I'm kind of wondering if the market if touched thing is Okay, so 1 year inflation expectations 2.9 versus expected 2.7, and 5 year came in line at 3.3 versus 3. The top line sentiment is lower than expected though, 68.9 versus a 71. So that's a little bit mixed. I'm not quite sure what the market will do with that. The results that I'm getting without market if touched turned on seem more realistic to me. I've never used that before. I think I've always just had that be false. Is MIT set the profit target as a market if touched order? Not a I don't know the answer to that. I'm surprised that I have never looked at this, because that seems like a potentially huge difference. By the way, it kind of seems to me, well, okay, that one it was false and they lost, so that's fine. Okay. But like it's fine. Like that's what we want. That's what we want. So now oh man. So now it makes me wish that there was some things that I could do here. Like I want to do like a backtest type. Okay, I think I know how to do this. Here's what I'm going to do. This is going to be so funny. Oh, Seth, you're so clever. Okay. Public. Oh, no, wait. It's a NinjaScript property. NinjaScript property. Public int dummy var. Get set. Boom. Okay. Now what we're going to do is we're not going to use that variable at all. But what we can do is we can use that to make it so that when we're doing like an optimization run, we can get the optimization run to run a certain set of parameters multiple times. Okay. So now we come into I want to look at 0.25 and maximum 2 and increment by 0.25. Okay. We're going to keep the stop the same on all of them. Okay. And we're going to, where's our dummy var? We're going to do 1 to 20 increment by 1, so that it will do 20 of each, because there's randomness to it, right? So that should give us like 60 iterations, something like that. 160. That was more than I thought it would be. Okay. Wow. Dude, wait, what? What? Oh, no, that one's funny because that's just the default variable. Oh my gosh, guys, this is so funny. Oh my gosh. Something that takes one trade a day, and look, all of these have Sharpe ratios over 0.5. What's with that? It's just picking a random time. Wait, is it really? There's got to be something wrong with this. Let me come back in here. Entry time. Okay, that's wrong. That right there is wrong because it is entering like in the afternoon. It should only be entering during our time period. What's with that? It is going random. It is taking a trade every day, but how come it's always doing it PM? That does not make sense. Oh, must be because... I see what I'm doing wrong there. I don't know if this will change anything, though. I don't think that this will change anything. But what's happening is I'm saying current is like the beginning of the previous session. And so it's only doing it in the offset from this time. But what I actually want is... I think I want this. I think I want to have this bit right here. I don't even know where that offset comes from. Doesn't matter. What did I just do there? Will that work, or will it like never take a trade? I don't think that I even need those. I don't know what those were about in that strategy, why I had that whole setup, but whatever. Okay. I need to not do an optimization run. Yeah. Okay, so what we actually need here is like a session iterator. Right. So like indicators, cumulative delta 2, I think, for instance, probably does it. In time frame never. We do this right here. Say, okay, the current should actually be daytime current equals session iterator get trading day times 0. Right? That means that I need a session iterator. And let's see here. I think that's something. Yeah, there you go. Has to happen in the configure. Okay. No, didn't like that. Object reference not set to an instance of an object. No, it still doesn't like it. Do I have to run something else on it? Won't be like that, huh? I should know why this isn't working, and I feel like I'm just a little slow today for some reason. Treasuries, well, still about where they were. Run. New session bars. Really? Really? It doesn't like that because it says bars. I guess with this shouldn't be in configure. It should be in state dot data loaded. How does it work in this one then? Maybe it's different between an indicator and a strategy. No, it doesn't like it in... Maybe I can't use a session iterator in a strategy? Do I ever actually use this in Now, hold on. I thought I was using bars somewhere else, too. Huh. Now use bars there. Wait, did I change it in the wrong place? Yeah, I did. That's funny. So stupid sometimes, guys. Just like not my day. There we go. Okay, so now let's look at the entry time. 6:30, 8:30. Yes. Yes. Okay. And it fell. Run it again. Okay, now let's try the optimization run. Start with a reward factor of 0.25. Go to a max of 2. Increment it by 0.25. And have our dummy variable go to from 1 to 20 to give us a good number of iterations each time. Let's include commissions for the fun of it. Okay. So that seems a little bit more realistic. So what I think is going on was it makes more sense to trade at the beginning of the extended session. The S&P 500 moves more overnight than it does during the regular session, essentially. But wow, this one got a 71% profitable. What? On random entries? On random? Well, oh no, wait. But what is it? What is the parameters? Reward factor of 0.5. Yeah. Yeah. That's funny. Wait, what? How is there a total profit then on this one? Because it's the cumulative profit here is negative. Oh, maybe it made its money at the very last bit or something. I tell you what, man, this thing is like way too risky though. Like, let's see here. Net profit. Oh, it doesn't have a day where it loses more than $500 though. Max drawdown. So I think the drawdown is 20. So it would fail the drawdown there, right? But oh, and it doesn't quite get to the profit target either. That's interesting. That one at least. Okay. Optimization graph. Net profit as a factor of reward factor and stop. Dummy var. Okay, whatever. That's interesting. What is this strategy about? Okay, what the strategy does is at the beginning of the session, it picks a random time and a direction to trade. So it's supposed to be trading completely random. And then what we have done is we have given it different reward factors. So we tell it, you know, trade equal risk reward versus a skewed risk reward and all of that. And then look at the results. And yeah, it's kind of interesting. So here when we look at, so this is like a distribution of all of them. Here's the reward factors and here is the profits. And I hate that it's blue because that's kind of hard to see. Good grief, is there a way to change that? I don't know. I'm sorry. It's just going to be hard to see in blue. As the reward factor gets further and further out, the variance increases, essentially. Like the amount that you're making or losing is like way more. Super interesting. So with a 0.25 reward factor, the chances of you making the profit target aren't very good, essentially. So I'm basically what I'm doing is I'm turning Ninja Trader's backtester into a Monte Carlo simulation to see how, you know, which ones, to see how like changing my profit target stop strategy affects the performance. We might stay a little bit extra today and keep going until we've done the experiment, because the experiment is this. The experiment is we're going to tell it to double down. We're going to tell it if you're down on a position, add another contract. And when that happens, try to just scratch it afterwards. Make it dependent on ATR. So it could do that. What was it? So we did this the other day, and what was it that we discovered? I don't remember. I think it was just that. It had to have been in this one. So like using the ATR stop seemed to help, or where did we use that? It's not actually in this one either, is it? The best way to do this. I kind of like it being just, I mean, you're adding a little bit of edge to it, right? Potentially. Because the whole thing that we're trying to test is how does using how does doubling down, what does the performance of doubling down do? But it's very interesting that with this strategy that I am able to get it to look profitable at least over a year time frame just from random entries. That's really interesting to me. So you want to see some, so the thing that I'm trying to show you right here, I can make it, I can do it better. Okay, here. So if I come in and I say max sharp ratio and I run this, okay. Wow, that ran fast. You're going to notice that the ones with the best sharp ratio are going to have this tendency to be like the ones with the skewed risk reward, like these, right? So this is one that was using a reward factor of 0.25, for instance, right? So you get these ones that just appear incredibly consistent, because what happens is you're getting, you know, you're supposed to have a normal distribution, and what you're doing is you're pushing this in like this so that you get a distribution that's kind of like this instead, and the losers are bigger. Well, actually, in this case, the losers aren't bigger, but they're bigger relative to your winners. So, yeah. So if I do it like this and I say graph, can I graph sharp ratio? Oh, I can't? But I can graph performance. There you go. Okay. There you go. So you should get these ones that are relatively high reward factor or below 1. And they are there. It's a little bit more randomly distributed than I thought it would be, though. If I do that again, yeah, a lot of it is random. A lot of it really is just random. How many of the iterations were actually profitable? I wonder. It's not going to tell me, is it? So interesting. What's the settings? Oh, that's cool. I see. I'm glad they added that. Interestingly enough, that time, the best that you got. Man, I tell you what. So those results look random, don't they? Those are results that look pretty random. I think our strategy, I think that our setup here is doing what we want. So now all we got to do is figure out what do we want to do for the doubling down strategy, right? So when should we double down? You know, if it's one like this where here's our price and here's our target and here's an equal risk reward target and here is a, you know, double stop, right? Then we could say that when you get the equal risk reward target, I'm doubling down here. I should be able to break even somewhere here, right? But if it's different, if it's like, here's this one and here's this one, where do I double down? So let's just say that we double down at half of the stop. How about that? So here was this double down. Double down factor. And let's make the default double down factor equals 0.5. Okay. So then, and do I have a double down price? No, I never did. Private double underscore double down price. So when I take a trade here, I'm going to say double down price equals close of 0. This is for a random long, right? So minus stop times tick size times double down factor. Okay, and then here's the actual doubling down. If position equals long and close is less than the double down price. Can only do it once. Let's just say underscore doubled equals false, like that. Okay. Okay, and then we also do this bit right here. Stop times double down factor. Is that what we called it? Double down factor is the stop loss. And the target is going to be something like so. So if we have this is 0, and let's say that this is 8, and this is 4, right? So if we took, you know, one contract here and one contract here, then scratching it would be halfway between the two of them, right? So it's actually going to be, the profit target is going to be the stop times the double down factor times 0.5. Yeah. And we do this twice, except for that I think we're not going to set the stop. I don't think we're going to change the stop. But we are going to change the target for random long to be oh, and this is where it has to be in prices, huh? We can say price double break even equals close of 0. Doing shorts, right? Minus stop tick size times stop times double down factor times 0.5. Random long. Doesn't like that, huh? Oh. Okay. Fingers crossed. Let's just leave that to 1. Okay. Well, that can't be quite right. Okay, it is not doubling down. Is that because I don't have the max entries per direction? 2. Yeah. Winning trade. Losing trade. No, that's still not right. Okay. So that's working now. The entry is random on time and direction. The exit is on what? The exit is on just a set target. Just a set target. Sorry, I didn't. So you probably asked that question a long time ago, huh? Yeah, in dollars. Oh, well, it's like 78. So it's going for like targets of 20 ticks in the S&P 500, right? So it's basically like five handles, essentially, right? And yeah. Oh, okay, I see. So there are going to be some times. Let's sort this by the name. There are going to be some times where it loses. And so the loss is going to be the 250 from the 1 from the original trade and the additional 129 from the second trade. So you don't see it in the stats, but the losers are bigger. And now what we can do that is not what I expected that graph to look like. Good grief. Oh, man. Okay, so now I need to add one more thing. You need to add one more thing. Ninja script property public bool use double down get set blah blah. And use double down. So if I don't use double down, if I tell it use double down false, I want to come in here. So I don't have use double down selected. Let's just change this over here to trades. Run. I should not get any double down trades. No, I do get double down trades. Oh, okay. There's another spot that I need to put it in at then, huh? Oh, I have to add it over here. And use double down. Now I should not get any of them. Yeah, all just random entries. Okay, and if I say do use double down, I do get the double down traits. Okay, so now what we can do is we can have fun with our optimization again, right? Double down factor 0.5. Stop and reward factor are all the same. And so we're just going to optimize on double down, and we're going to optimize on the dummy var. And for this one, let's do from 1 to 100. So it should do 200 back tests of each. Okay. Oh, this works. Oh, it's going through it fast. Okay. Optimization graph. We're going to look at performance. And then doesn't let me iterate on that it doesn't let me choose that in here. That's lame. That's really lame. Okay. There's a way to fix this. Oh, I have to trick Ninja Trader here. Public int use double down. Use double down. There we go. 0 to 1 and 1. And dummy var 1 to 100. Performance. Use double down. Oh. Oh. Okay. But no, we did get what we want, right? We did get what we want, right? Okay, so it's a really small difference though. Huh. It's a really small difference. And I'm doing the wrong thing. Let me change something here. Let's go back to max net profit. That'll probably make it a little bit easier to see. Wait, what? That actually does not do what I think it what I thought it would. Wait, let's just double check something else here. We didn't test when we had this like that. If I use double down as 0, I go to trades, only randoms, and then I go to 1, and I still don't get them. Ah! It's like I knew something was wrong. I knew something was wrong. But why? That's weird, though. Why is it not doing it? Use double down 1. I think I need to like compile it and then let's switch it to something else and switch it back. Run that. Why you on the work? I'm saying use double down equals 1. It's saying, okay, if I'm in a long and I haven't doubled and use double down is equal to 1. What if I change this to use double down is equal to 0? Shouldn't change anything, right? So bizarre. Same thing. Same thing. We're gonna have to debug. Reattach to process. Okay. And run. Come on. One. Double is false. It's flat. Oh, that's odd. Why is it? Oh, well. Is it perhaps just not ever getting to here? Oh, okay. Use double down. Okay, so we are short. Use double down 1 if the close is greater. So what is the close right now? 4946. Then it should go into this. Oh, no, wait. You know what is going on? You know what's going on? I'm so stupid. So stupid. This changed again. Orders per direction. Yeah, there we go. That's why. There we go. Okay. My gosh, guys, that was a little bit stressful. Okay. Not stressful, but frustrating. Okay, so let's make sure that's the same. Okay, so use double down between 0 and 1. Okay, and dummy var between 1 and 200. Summary results print. Yeah. Now I think we might get the results I'm thinking of. Yeah. Except for that, I can't really. Let's do this. Dummy var. Okay. Oh wow. I'm not actually seeing a statistical difference between the two of them. Let's see here. Maximum drawdown. Average profit. No, they don't want to do anything. MAE. Okay. Yeah. That makes sense to me, I think. Yeah, when you don't double down, you get more. Okay. Performance, though. Well, at the very least, I should be able to go in here if I change this to max probability. No, not probability. Max, max percent profitable. Yeah. The ones that use the double down, generally speaking, are a little bit more profitable. I'm trying to think of if there's some other mistake that I've made. It may just be that the results I'm getting here from NinjaTrader, or the graphs that I'm making here in NinjaTrader aren't sophisticated enough, you know? I don't know. Maybe 200 is not enough to really see. I would expect that the double down one to have like a different distribution. But you can't really see it. Does seem like the best performing ones did not use double down though. Well, what we should actually be doing is this. That. Can you show the profit loss sorted on the time of day and day of the week? Oh, well, so like it only takes one trade a day, so I don't think that would really show you a whole lot. Ah, interesting. I don't know. I might need to take this into R and do some stuff with it in R. But it kind of seems to me like doubling down doesn't really do anything on its own. But I'm also still a little bit weirded out by that. The amount of times that these come out and are actually quite profitable. Wait, how come that one is showing me the total net profit? Oh, because, oh, wait. We don't want total net profit. We want No, we do want total net profit. Max net profit. Try doubling up if it's a profit. Now that's an interesting one. Yeah, that's a good one. I don't know if we have time to do that. We could try that on Monday. It normally is about the time that I would get going. So like when I look at this one and the parameters and it says total net profit 24,000. But that's not what this says. So like something's very, very wrong here. That's ridiculous. There's no way. That one is okay. Dude, it's so funny. Oh. It seems to me that I have a strategy and an entry and everything that is so random. It's just telling me that things like, you know, doubling down don't really make a difference. Like, there's certainly bad things about it because it'll make your losers larger. But if you're just trading small enough that that's within its, you know, the range of conditions and things like that, the act of actually doubling down doesn't really change that much for you. Like the number of times that it works gets canceled out by the number of times that it doesn't work. And it just in net doesn't really help you. And I'm going to bet, although I don't think we really have time to test it, but I'm going to bet that like adding a contract when you're doing well, that it's probably going to be the similar sort of thing. The amount of times that helps you is just going to get canceled out by the amount of times that it doesn't help you. And that like the whole thing here is that it's like a 50-50 on every trade. You're just going to have some that are really lucky and some that aren't really lucky. And I, you know, if I could make some changes to give me some spit some stats out to the console or into a spreadsheet, and then I could analyze them in R, and we could get a little bit better stuff, right? Like we could see the amount of number of them that are profitable versus not, and that sort of a thing. Because I thought that you double down on losers, that it would significantly increase your win rate, but that, you know, you would lose eventually, and so like the net profit on it doesn't necessarily is good. But that's not what I'm getting. So that's funny. Huh. I have to think about what I want to do with this. I mean, one thing that we could do. Yeah, I can post the code. Let me post it in the NinjaScript channel of Discord here. I'm gonna upload the code. Strategies. Where is it? No. Documents. NinjaTrader 8. Bin custom. Strategies. double down. Enter. And then I can copy copy message link and post it over here for you. Because I think with the code that I got that you should be able to set it up to double up on winners pretty easily. You just kind of have to shift everything from double, you know, when you're down to when you're up a little bit. But this is really cool. So now we could go back and we could also test some other things like, okay, setting, well, I don't know about drawdown would really help in because we only take one trade a day. But like for instance, setting your targets based on the average true range of the daily, for instance, or maybe just the local average true range might be interesting as well. And how does that change things? And you know, now that we've kind of have something that's like really a random trade, you should be able to, like, you know, do enough iterations to be able to see some sort of a statistical difference between them. And like maybe the double down thing, there is a statistical difference, but we need to do it like 10,000 times to see it. And we need to do it over more years and things like that. Yeah. I tell you what, though, one trade a day just doesn't give you enough data. To, like, if you do one trade a day and you have a year's worth of trading, like, you can have a trading run that looks absolutely, like, the chances of you having a trading run that looks absolutely amazing is actually not as bad as you think it is. So, like, there really is, like, so many retail traders that, oh, I've been trading for a year and I'm profitable, and their trading is actually random and they don't have anything. That is just so fascinating to me. I don't know. I feel like we kind of got to do something that's a little bit more. You know, there was this book I read from was it Davey? I don't know. It was a guy on the Futures IO forum that he had some stuff that was like, yeah, here's some things that I tried and let's test them and doing tests and stuff like that. And I didn't go through all of the things that he was doing for like his take profit strategies and things like that. Because I remember him doing stuff with like chandelier and parabolic SARs and things like that for profit taking that I've never really gone into. So it's like, now that we've got this, okay, let's change the profit taking strategy a little bit. See what that does. So interesting. But having it like this scenario where like I pick a time in the most active time of the day and I just take a trade, that gets me random results. That's really good. Because one of the problems that I think I've seen with some of the testing that I've been doing is like, you know, there's other biases in there. This seems like the results that I'm getting are much more pure. Now, the downside of this is that you've got to run it like a bunch of different times. So that's probably the next thing that I should do is give it the ability to pass a seed into the random. That way, when I get a result, I can, you know, determine what the random was and yeah. Once you know the random, then you can do back tests on that random over and over again. So that you could, you know, if I was going to do something like, let's see how things go with the double down factor versus the reward factor and all of that. Well, I want them to be run on the same set. Like, yeah. So maybe I could do, like, maybe instead of using dummy var, I just pass dummy var into rand. Right? I don't know. Thoughts? We can do it on Monday. You guys play around with it. I have some other things to do, edited video and all that sort of stuff. So, till then, stay excellent, team.